Hello everyone and welcome to our channel. Today we're going to tell a real story of high-stakes legal battles and global business. Yes, we are talking about the Vodafone taxation issue, a landmark case in the world of international tax disputes. So, our story begins in 2007. Vodafone, the British telecom giant, acquired Hutchison Essar, an Indian telecom operator, for a whopping $11 billion. Hutchison Essar was a subsidiary of Hong Kong-based Hutchison Whampoa. This acquisition was structured as a share transfer deal where Vodafone bought shares in a holding company that owned the majority of Hutchison Essar. The Indian tax authorities had a different take on this transaction. They argued that the deal involved the transfer of assets located in India and therefore Vodafone should have paid capital gains tax on the transaction. According to them, the ownership of Indian assets was indirectly transferred through the holding company. Vodafone, on the other hand, contended that the transaction was an offshore deal and did not involve direct transfer of Indian assets, thus not liable for Indian taxes. In 2008, the Indian tax authorities issued a tax demand of about $2.5 billion, asserting that Vodafone was liable for capital gains tax on the acquisition. This led Vodafone to challenge the demand in court. Vodafone's legal journey began with the Bombay High Court, which initially ruled in favor of the tax authorities. But in 2010, the Bombay High Court ruled in favor of Vodafone, stating that the company was not liable to pay tax in India. However, the Indian government was not satisfied with this decision and appealed to the Supreme Court of India. In January 2012, the Supreme Court ruled in favor of Vodafone, stating that the transaction did not involve a direct transfer of Indian assets and thus was not taxable in India. The story does not end here. Despite the Supreme Court ruling, the Indian government introduced a retrospective amendment to the tax laws in the Finance Act of 2012. This amendment allowed the government to tax transactions involving the transfer of shares in foreign companies if the underlying assets were located in India. This move sparked outrage and debate, leading to significant controversy. Vodafone continued to protest the retrospective tax demand, arguing that it was against international norms and undermined legal certainty. After prolonged negotiations in 2014, Vodafone and the Indian government reached a settlement. Vodafone agreed to pay a smaller amount, but the issue of retrospective taxation remained contentious. This case had far-reaching impacts. The retrospective tax amendment and handling of the Vodafone case raised concerns among foreign investors about India's tax policy stability. It attracted international criticism and highlighted the complexities of international taxation. The Vodafone taxation issue is a key example of the challenges in international tax disputes and the complexities of retrospective laws. It also serves as a reminder of the importance of clear and predictable tax policies for fostering investor confidence. So thank you so much for joining us on this journey through one of the most high-profile tax disputes in recent history. If you found this video insightful, do not forget to like, share and subscribe to our channel for more such deep dives into intriguing business stories. Until next time, stay curious.